This is so delightful. Fred, thank you again for jumping on the podcast. I'm truly honored, and I apologize that I need to bring you over and over again here. And hopefully this time it will work.
It's my pleasure, and life is full of twists and turns, and I completely understand.
Well, again, I'm sorry for repeating the same joke for the 10th time. It's like, man makes plans, God laughs at them, and the kid pisses on them. Yeah, that's the best way to describe it. It's like, forget what you have planned. It's like, surprise. And then your kid comes in and go like, yeah, your schedule, my schedule.
It's just like the startup world.
It is. Okay, let's talk about startups. What's up? How's your startup going?
Ups and downs, good and sometimes better and sometimes worse. But no, things are going really well. We're grateful. We've got a terrific group of investors, a great team here at Mile Auto of insurance experts, and customers that are low mileage drivers love us and retain really well. So it's going well. We, obviously in the insurance space, if you don't focus on loss ratios, you're in big trouble pretty quickly. And so we've been very fortunate with our business that we have strong loss ratios. So we have no complaints and much to be grateful for.
So for those who are not familiar with Miles Auto, who is your target audience? What type of policies do you sell? MGA, brokerage? Who is the capacity provider? Let's wait with the capacity providers.
Yeah. So we are a pay-per-mile auto insurance MGA. We have one carrier partner. We have multiple reinsurance backers for our program. We are distributed via independent agents, predominantly, both the digital platforms that you might guess, and also brick and mortar agents. We also have a partnership with Porsche Financial Services, and so Porsche also markets our product to all Porsche owners in the States where we are currently licensed to sell under the brand Porsche Auto Insurance.
Now, we already talked, so this is the second time that we're recording this podcast, so I'm familiar with most of the answers and the stories, and they are awesome. And ideally, they should come later during the podcast. But, I can't hold myself for asking the most obvious questions, like Porsche or Porsche?
What a great question. In fact, before we started working with Porsche, I would say Porsche, a one-syllable word, but Porsche is a two-syllable word. It's the name of Ferry Porsche, who created the company. But it's definitely a two-syllable word, Porsche. So Porsche is the right way to pronounce it.
Yeah, I wonder now with all the tariffs, how is that going to be? Because Ford, well, that's one syllable. Yeah.
Ford, yeah.
Okay. But,
Ford. Yeah. So no, listen, that's something we clearly didn't discuss last time, or the tariffs, because those were not on the table. I think that the tariff situation will be quite interesting in the auto insurance marketplace. Clearly, it will impact imported parts and also imported vehicles. Who will bear the cost of those tariffs is yet to be determined. I'm assuming that they will be shared among the manufacturers, the wholesalers, as well as consumers. I believe will see an impact as well. And if consumers see an impact, insurance companies will see an impact as well. But the proportions, the percentages are certainly unknown at this point. But I believe it will impact the auto insurance industry. But because, yet to be determined.
I think it's even worse than what we've seen in the past 10 years. Because earlier, if you had a bumper to bumper, okay, you fix a bumper, not a problem. And then we had a problem because now within the bumper or the rear, you have so many sensors that that small dent is actually very expensive. And during the COVID, and then we had the lack of semiconductors and different sensors. So the supply chain wasn't there. So everything was in demand, and with that, the cost. So Ed, still, I don't know if in terms of the supply chain is that, or the supply itself, there is still a shortage. But now add to that the tariffs, that's going to be very expensive to the insurance companies, especially the auto insurance. So what, I know that you partially answered that. What, how are they going to deal with it? Is it
It
just
could,
going?
it, yeah, great question. It could be, obviously no one knows. I mean, I have an opinion. So if it's my
That's
opinion,
why I'm asking.
it's likely wrong. But I think that the impact will be similar to the impact from inflation, because in essence, as the costs go up, uh, I don't think there'll be a shortage of parts, although a few automakers like Land Rover, they've announced that they're not going to be importing cars into the United States for a month until they figure out the impact of the tariffs. So there will be some impacts from a pricing perspective. There could be a supply interruption as the different players in the supply chain determine how to ingest the cost increases. But it's still too early to tell. But I think a number of insurers have started filing to reduce their rates. Those insurers
Interesting.
may regret that decision to do it because cost and prices will go up of parts and replacement vehicles.
And that's kind of the main problem that I see that you just mentioned. It's like, okay, great, listen, tariffs and the impact going to be on parts, because whatever you build, it's starting from the basic material. If it's the car industry, aluminum, but if we are talking about the parts, if it's the dashboard, whatever that may be, just the side mirror nowadays has a camera and other near collision sensors, right? All of those are things that are created in so many different parts of the world, and everything comes to the OEM or other integrator, and each part is going to have its own different tariff. And as a result, let's assume a side mirror is going to, the cost of it is going to increase by 25%, 20%. Who is going to, how is the insurance going to deal with that, right? Especially here, let's say California, that to file and to adjust, which means at the short term, if I read it correctly, the loss ratio is going to get a major hit, and we're going to discover it next quarter.
Yeah, and again, I don't know that it will be a major hit because I think different layers of the supply chain will ingest cost increases. So I think the manufacturers, in order to keep up their market share, will ingest some of the cost because they don't want to shock the market by having their
Yeah,
prices go up immediately 20 to 25%. So I think it will be spread throughout the supply chain, but it will definitely hit the consumer. It will certainly hit insurance companies, both from a parts perspective and as well as when there's a shortage of vehicles because prices have gone up, then the prices of used vehicles go up, which means the value of a wrecked vehicle or a vehicle prior to an accident, the ACV will increase as well. So it will be a challenge to the marketplace. But I don't think if there's a 20% tariff, 20% will not flow through to the insurer. Will it be 10%? Perhaps.
yeah, there is so much uncertainty now. And again, we are recording this April 8th, so we are still waiting for April 9. And then how the market within the insurance industry, the different supply chain and etc. will actually adjust to it. And then, of course, it's a process that will take months. Someone will need to take different players in this chain will need to take their strategic approach for, it's not strategic, tactical approach to a different strategy in terms of like, how do we adapt to this volatility and uncertainty? It's most definitely it's going to be interesting, and to see how different companies adjust to it. If we have the public ones like root insurance or others, which is very similar to what you're doing, and then yeah, it's most definitely interesting time, and that would be what the fourth crisis in my lifetime that we see economically. Yeah, yeah, even more, but let's call it adult lifetime.
It's going to be interesting to see if the startup community is more flexible and adaptable to be able to adjust those changes than traditional insurers. So it's all yet to be determined, and I don't have a crystal ball, but I'm still looking for one.
No, and usually, when I did, now we are not talking about investments, but usually when I talk about investments, I need to pull out the disclaimer that all it's entertainment, nothing is an investment advice, etc., etc., etc. And then it's like, hey, this is just a few people talking for entertainment on YouTube. Don't listen to us. It's a no, and the most important thing is like we don't have crystal balls. If we did, you know, we'll not share it with you anyway, because we're going to just do what we need to do with our private crystal balls. Um, yeah. So let's partially ignore this, and then we can talk about private investment versus public, and where things can be uh, more stable nowadays. Or maybe that's a topic for a different conversation. Um, how how did you? Let's talk about you and your background. How long have you been in the insurance industry?
I guess as long as I've been driving and had to buy insurance for my car. Of course, my parents bought it for me or initially, but so I've been buying insurance for years. So I would say that was my introduction to the insurance industry. But my real entree into this space came from a prior company I co-founded called Hughes Telematics. And at Hughes, we built connected vehicle systems for companies like Mercedes-Benz. And so when you think connected vehicle, think systems like OnStar. The Mercedes product was called Mercedes Embrace. And so with that background of working with companies like Chrysler and Mercedes and Nissan and VW from a telematics side, I saw the connected vehicle data that was coming out of cars, and I thought that data was interesting. I went out to the market when I was a part of Hughes and to see who might be interested in all of this connected vehicle data. Pretty quickly fell into the insurance industry as most of the insurers were exploring usage-based insurance. And we went out to the market, showed them this data. They said this data is quite interesting. We ended up focused on State Farm. My team at
Mm-hmm.
Hughes designed and built State Farm's usage-based insurance program called Drive Safe and Save. We ended up taking Hughes Telematic public via a SPAC, and then we
Okay.
were acquired by Verizon in 2012, and so that was my exit from Hughes, which is now at that point called Verizon Connect. And I continue to be challenged by the importance of mileage data and usage-based insurance because about 75% of the underwriting value of all of that connected data, things like speed, location, time of day, day of week, cornering, braking, acceleration, all of that data, about 75% of the underwriting value was just simply how much time is a car on the road. Cars in garages don't have wrecks. And I was also concerned about consumer privacy. I was concerned that consumers were sharing so much data with their insurance company in order to get a discount. And I didn't feel like it was, frankly, any of your insurance company's business where you or your car would sleep at night. And so after leaving Hughes and after my non-compete expired, I found a really smart electrical engineer, and we came up with a number of computer vision and machine learning technologies to capture and validate odometer data for every car on the road. We filed patents and then went back out to all my friends in the big insurance companies and said, we've solved for accurate odometer data. And they said, well, that's great. That's the most important data. They looked at our systems. They piloted the programs. They said, this works well. It's cost effective. But the unanimous response, Gilad, was, we're not interested. And I said, well, how can you not be interested? We agree it's the most important data. And they said, well, we just don't want our low mileage drivers to understand that we've been overcharging them for generations. And I thought, well, that makes sense. That's good for you and your customers. It's not good for me. But one of our advisors said, well, Fred, why don't you go start your own MGA? My response was, I don't even know how to spell MGA, much less start one. But I knew some people that had done it, went to them and asked them to teach us how to do it. They said, no, we want to be your co-founders. So, which was a wonderful thing for us. So we brought in these co-founders, started Mile Auto back in 2017. And here we are today. We just celebrated our 8th birthday 2 weeks ago.
Happy birthday.
Thank you. Thank
Congratulations.
you. It's good to be 8
Yeah.
again. Good to be 8 years old.
Again, at this point, what is it? Third grade? It's awesome. You already
Be
know how
third
to
grade.
write paragraphs and articulate thoughts and ideas. It's great.
Maybe you could do that in third grade. I
Oh,
certainly couldn't.
I don't remember what. No, it's like you learn the ABC. Then yeah, sure. Let's go. Let's go with that. Yeah, yeah.
We came out of an accelerator at Georgia Tech.
Lovely.
So we appreciate, how all of those systems work and the benefits to startups of getting their footing in those environments. It works well.
And I think that last time we talked, and I even had my Georgia hat
Yeah.
and somewhere, and you commented that that's the wrong Georgia. And I was like, go dogs. And he was like, no. What was
Let's
it for
go
you?
Yellow
Hornets?
Jackets.
Yellow
Jackets. The Yellow
Yellow
Jackets. Go
Jackets.
Jackets.
Yeah. No,
That's too funny.
I'm still. Well, the funny is the way that they spelled the dog with WH, maybe was there something like that.
DAWG. See, that's the education you get if you go to the University of Georgia. They don't know how to spell. It's a shame.
Listen, my good friend is the dean of the business school, so and he's so nothing to do with insurance. It's one of my favorite stories because finally, after so many years in the US, and I had someone who was so fascinated, so like a hardcore college football enthusiast, knowledgeable. He's like, okay, here's what the coach is going to tell them now. And he explained everything to me. And I was like, oh my God, man, this is why you're a dean of a business school, right? You can teach a person like 5 minutes, and I'm so excited about college football just because. And by the way, and we can take that, going back into talking about insurance and business. And sometimes that's also one of the most important traits that a leader has. It's that contagious enthusiasm about something that they so deeply believe in and feel and have strong feelings. In this case, it's, college football. In others, it's let's make the world a better place or let's sell insurance. But
Or let's sell insurance to low mileage drivers and charge them just for the miles that they drive. So our
indeed,
whole focus as we got this started was treating low mileage drivers fairly. And we found a large group of consumers that really appreciate only paying for what they use, which is an industry trend, not just insurance, but in a number of other industries. Charge people for what they use and tailor products based on the specific needs of the customers.
so what's the difference between you and your competitors? Because we've seen a lot of pay as you drive or user or usage based insurance.
Hmm. Yeah, so great question. There are some similarities and some differences. Companies like Allstate have a pay per mile product nationwide. You know, Lemonade acquired Metro Mile.
Yeah.
There are other companies that are dabbling in the space. Most others in the space plug an OBD device in your car
Mm-hmm.
like this. And this OBD device not only collects odometer data, but also collects all of those other potentially intrusive data elements like speed and location and time of day and day of week. And so most of our competitors, they're collecting that. Uh, Many of them use that in their ratings algorithm. We don't believe that that's necessary. We use traditional insurance underwriting elements. We use credit in states where credit is legal to use, but we use driving history, prior insurance claims, things of that nature to rate a customer and their vehicle. And then we divide that into portions. There's a fixed base every month, and then there's a few cents per mile that the customers drive based on how many miles they drive. So, from that perspective, it's a different product than other products in the market. And you know the good thing about auto insurance in the United States, it's a massive market. There are
It is.
250 million cars on the road. It's a $300 billion industry in the U.S. alone. So there's plenty of room for segmentation for customers. So yeah, some products work for customers. Ours works for a number of customers. So it's a rich environment. And frankly, when Allstate and Nationwide started their programs, it was very good for us because it validated the market. It
Yeah.
validated what we were doing, that pay per mile was a thing. And it really helped us grow our business when they came into the market.
That's one of the things that I love about someone already validated the market for you. It's not you are not the first to market. You are not the first one that needs to educate the market about the new product. It's been there. Now you can act as second but better, second but cheaper, second by more expensive. You can find your niche based on that anchor that already verified that there is a market there. And who was it that they were pushing to increasing the pie instead of trying to get bigger and bigger slices? But that's also it
Yeah,
has a little
and
bit of yeah.
and
Go
an
ahead.
advantage of not being first to market. It's like MySpace and Facebook. But you know, having because it's a regulated industry, having regulators familiar with pay per mile is certainly a benefit.
and
That
and I
that
find it very
generally
interesting.
accepted that mileage is a relevant, you know, element for um, pricing insurance.
And you're taking the more conservative approach of, hey, this is how it's been underwritten so far. We're doing the same with a small change based on how much
Correct.
mileage, but you have the base unit. Because I've seen many decks and talked with many different CEOs of very similar, well, basically your competitors. So we are not going to name names and everything, but each one of them has his own different, I would say, as you mentioned, different approach. It's like, when do you drive? What is the route that you drive? Is it there were a few that looked at the quality of the road, or if you had this is the common routes that you take, how many accidents? What's the weight of the accidents of or the risk of that path and routes that you keep driving at certain hours, etc., etc. And each one of them they kept changing and doing that. And you weren't like, I don't care about it. I'm actually doubling down on the privacy, which kind of the old school or what we've seen so far. So in terms of underwriting, this is my approach. And you know, looking at that, it's like, yeah, privacy, and we completely forgot about personal data and protecting our data for that. We are kind of giving it away for $2-3 of a discount.
And some consumers don't appreciate that until they get caught on the wrong side of data disclosure. So when we were building telematics systems at Hughes, we were constantly subpoenaed for data by different courts. And it was not just accident data, it was things like divorce cases. Where was my husband
Porsche?
sleeping on August the 12th? Or child custody cases. I think my ex wife picks up the kids and goes to a bar on the way home. And sometimes our data was used to put people in jail. And that's when I said, that's none of your insurance company's business to have all of that data, and certainly to have that data that can be subpoenaed for court cases. And so I think our customers understand that. They like the transparency. They like the fact that we don't collect all of that data that can be used not only for underwriting, but for other purposes as well, which is very intrusive.
Let's talk more about Porsche and the benefits of working with them. Let's start how did you start working with Porsche?
There we go. There we
All
go.
my life I used to say Porsche, and somehow at a certain point I switched to Porsche. I don't know why, but it's Porsche. How did you start working with Porsche? And then, well, you can share the benefits of working with them, and
Yeah. So
that's your story.
it's a long story. I'll make it short. There are lots of Fortune 500 companies based in Atlanta. We're based in Atlanta. Coca-Cola went to its fellow large companies in the city and said, we've got a great startup community, but it's very difficult for a large company to work with a startup because large companies tend to kill startups. And so they said, let's start a new program to figure out a way to work with startups. So as a result of that program called the Bridge Community, started by Coca-Cola, it only lasted a couple of years. We were invited to pitch, and following that, we were approached by Porsche. And Porsche said, pay per mile insurance is interesting. Most of our vehicles are low mileage. If you will adjust your product and services for Porsche vehicles and Porsche drivers, we'll license the brand to you and we will market it to all Porsche owners in the states where you're licensed to sell. So Porsche was very patient to work with us as a startup and has been very supportive of the business. And they've been an amazing partner for us. But they care about the ownership experience of a Porsche owner. They felt like one of the worst parts of owning a Porsche is the insurance experience. And so they wanted a direct hand in designing a program specifically for Porsche customers, things like OEM parts, agreed value coverage, concierge claim services, priority access to Porsche certified shops, and things of that nature. So that's what we built into the product for Porsche. And Porsche customers love the product and retain incredibly well for us.
Well, it's a premium car, so you expect a premium experience also from the insurance as
Exactly.
well, which is part of the experience. If something goes wrong with your premium car, you want to get it fixed and to get the financial backing to remedy the situation.
That's right. That's right. And so Porsche Financial Services stands behind everything we do, and they make sure that the product that we deliver is deserving of the Porsche brand and Porsche crest. We are audited annually by Porsche in Germany. So it's a really good working environment. They've trained all of our customer care teams and claims teams. And the worst part of working at Mile Auto is Porsche requires us to take all of the team down to the Porsche track once a year and puts everybody in cars on the track because it's actually very serious business. Not only did they teach us how to pronounce it, but they want to make sure that anybody who talks to a Porsche customer truly understands the Porsche experience and the Porsche brand. So it's an important part of the job that we do. But of course, it's a good day at the work as well when you have to go and drive a Porsche.
Well, one day I may considering getting their SUV. I find their cool cars a little bit too low for me, or as my niece call it, oh man, not no. You need a warm up before you get into that car. It's like, yeah, Maybe the SUV.
Their SUVs are terrific.
Yes.
They make a great car. The Macan, the Cayenne, they're terrific.
And they make more sense to me than what I see here on the streets of LA, the Lamborghini SUV. It doesn't make sense. Seriously. You have the Lamborghini, you have, actually everyone has an SUV now, except of Ferrari. I haven't seen a Ferrari. Rolls-Royce, most definitely. Um,
Maserati makes an SUV. You're
yes,
correct.
yeah. All of those guys, all the Waymo, Jaguar, although those guys are completely rebranding themselves, to be determined how is that going to look. Did they already expose it or only the ad? I'm not, sorry to say, I'm not really following.
Yeah, there's a Jaguar SUV on the road.
Oh, there is. No, I know. There is. That's the Waymo. That's the one that is self-driving that you just get into. There is no one there and you go like,
Interesting.
yeah, yeah. That's kind of what Tesla is now entering and going to completely change or maybe even
And
take Uber.
it will be a
Yeah.
massive change in the auto insurance industry because when you've got a self-driving or partially self-driving vehicle, all of a sudden it's not traditional auto insurance, it's products liability insurance. What's controlling the vehicle? Is it the computer or is it the human?
Mm-hmm.
And we actually have patents in that space as well as to how to
Yeah.
bifurcate and build the insurance product based on uh, what's actually driving the vehicle. So it's an interesting
Damn.
space that's going to be important in a few years.
I think that that time already arrived in terms of making sure that you have the patents and getting the infrastructure for that business because self-driving taxis are just around the corner. You already have them with Waymo and all the others, and soon enough it will scale up. So for now, they are very limited to small zones in San Francisco, Los Angeles, and a few other very defined designated areas. But once Tesla will deploy at scale their Tesla taxis, um, it may be a game over for Lyft and Uber.
And you can tell from telematics, you can tell what's actually controlling the vehicle. Is it the computer or is a consumer grabbing the wheel or pushing the gas pedal or the brake and being able to determine who's responsible for what in an accident is there?
Oh
I mean, you're
wow,
correct. It's already out there. But that's going to be the basis for a lot of insurance as we get moved from level 2 to level 5 autonomy.
that will be so complicated, especially here in California. I'm remember when I was in Farmers, we had the what was it, the common something, which basically, if you were an Uber driver, you had to have three different insurance. You had, well, I'm driving
Hmm.
my car,
Hmm.
right? So it's like personal insurance, personal coverage. Then I have the application on, but I don't have what's it called? Not a guest, someone that you're driving. And now I do have someone in the back seat. Oh my god, I completely blank out of the name of someone that sits
Passenger.
a passenger. Oh my,
There we
yeah,
go.
jeez. So I'm looking for a passenger and I have a passenger. So those are three different states of insurance or business. I have a passenger, I don't have I'm looking for a passenger and just driving my vehicle. And it's the same vehicle, but different states in terms of the insurance or different insurance or coverages. And I just wonder how that's going to complicate things because if you have a self-driving car and then the passenger is trying to interrupt, it shifts from a business interruption or a software coverage to something else. Yeah, no,
It's going to be fascinating, but
I
I
know.
have confidence that the insurance industry will adapt and figure it out. But it's exciting. It's exciting to see where the industry is going to go.
But first, let's see how the tariffs and how the insurance industry is going to react for that. Yes, and anything optimistic that we can talk about before just like it's going to be interesting in the next few years?
So I think that the large insurance companies, the large incumbents, today appreciate the value that startups are bringing to the insurance industry. And as a result, there will be more collaboration in a positive way to get some of the creative concepts and systems out to the market more quickly. Even though traditional insurers move very slowly, I think it's exciting that we're starting to see more things hit the market at a faster pace for more customers than we're traditionally accustomed to seeing. So I would say that that's going to be a change. I would say another change is going to be that insurers, and this is where the benefit of smaller, more nimble companies like ours, we have the ability to tailor products more specifically to what consumers want to have. And that's an advantage that we have in the marketplace. So it's going to be an interesting few years ahead of us with tariffs, but also with some of the new technologies hitting, and then the impact of things like artificial intelligence and how all that wraps into the equation.
Wonderful. Okay, so first of all, thank you very much for your patience and jumping back on the podcast to another episode. And I know that we've been chatting more time than we actually planned. So let me ask you the last question. Do you have a good failure or lesson learned that turned into a success that you feel comfortable sharing with the audience?
Well, I've got lots of failures. I'm an expert at failure. Um, so yeah, so I would say uh, persistence is critical. Early on, when we had developed an element of our technologies, we had shared it once our patents were filed and once our NDAs were signed. We had shared that with a large traditional insurer that studied it and worked with us for quite a while, and then said they were not interested. And suddenly they came out in the market and introduced a product and technology remarkably similar to what we had exposed to them. And I think that our ability to focus and be persistent and not be dismayed by that gave us the opportunity to outlast them, end up making our product even better than it was, and survive that important challenge. It was certainly a uh, David and Goliath type of situation,
Yeah.
and we were able to survive that. So we're grateful, but again, it's all about the team we have, the investors that we have, and the partners in the marketplace that have worked with us and stuck with us from the very beginning.
Yeah, I think that the play of brain rape, as we call it, between a big company and a startup, I've been through that, and it's super frustrating.
Mm.
Back in the day, I was working in a startup in the pharmaceutical clinical trial space back in New York, and we worked with one of the largest pharmaceuticals, basically setting up the dash. It was the beginning. The whole idea was to create a white label, etc., for smart matching of potential patients to clinical trials, right? Every second counts. If you need to go through the protocol. You have CROs, you have so many different players that their whole job is to make sure that you can find the right patient that will continue through all the protocol throughout the clinical trial. Otherwise, it's a waste of time, etc. And that can kill hundreds of millions that were invested. Now, the thing is, the challenge is that you have a stop. You have basically time, the 10 years for the patent, and that's the only time that the pharmaceutical actually has the opportunity to make money before the patent expires, and then some sort of a generic a company in India is going to mass produce it for cents on a dollar,
You bet.
and then
Yes.
actually it's going to be created and people can actually finally access it. Anyway, they tried to do a copy paste. They failed, and it was frankly lucky for us because they missed a few critical points of how do you actually do that. So just copy paste doesn't really work. And since I'm very sensitive to it. However, you always have this conversation with entrepreneurs or overprotective, very defensive. No, I need to sign an NDA, and we need to talk, and I cannot share any information, and I cannot talk about my startup. It's like, dude, if you cannot talk about your startup, what do
Yeah.
you want? It's like,
you have no business.
You're asking me to invest in your startup and you're not going to tell me what's your startup, or you want me to hire your services and you're not going to tell me what you guys doing. On the other side is like, so there is a legitimate scare there. However, you need to be smart about it. And I find it still as an art, although there is a lot of, I know a few lawyers that will say that it's not an art, it's just legal. But still, also legal can be an art. But yeah.
Yeah, I mean, just I think one lesson from all of that is working with a big company, you need to try to keep the pace and the momentum moving quickly, because in a big company, and I'm extending grace to this one company, um, they bring new people into the program all the time, and so the new people don't understand the history of the relationship, and all of a sudden think that what you're talking about was really that company's idea and not the startup's idea. So certainly learned a lot from that, but I think my recommendation to other startups is when you start working with a big company, keep the pace moving as quickly as possible, which is a challenge because you don't control the pace. But
And you
it's
don't
that
want to overbend your champion, but you want to make sure that while you have a champion there, that you get something done, because even champions, they get replaced
perfect.
over and over again.
Exactly. You're exactly right.
Yeah. And with this positive attitude and great note of success and champions and momentum, Fred, thank you very, very much for joining me again on the same podcast.
A pleasure. Thank you for introducing me to your beautiful 4-month-old daughter. And thank you for having us. And we enjoyed it.
My pleasure.